Good afternoon, everybody. A very warm welcome to our second series on Africa Digital Baraza, where we bring you ideas that matter for Africa. Today, I'm delighted to welcome you, where we look at the role of diaspora financing, asking ourselves, post-COVID, can diaspora remittance and saving be able to help fill Africa's financing gap? African financing gap is 120 billion to finance our trade finance. We need at least 92 billion for our infrastructure needs. We need another 100 billion for Africa healthcare sector. So the World Bank tells us that there is, from the Africa diaspora, the continent receives at least $48 billion annually. How can we tap this to be able to support Africa development? This afternoon, I'm delighted to be joined by excellent speakers from all sectors who will help us discuss this topic and help us find solutions on how we can tap diaspora remittance. Our discussion points will vary from, we'll look at microeconomics implication of the diaspora remittance in various countries. We'll also look at the global remittance trends. Has COVID-19 affected the amount of money we send home? What is the role of Africa DFI in galvanizing remittance to support job-creating sectors? And how can we have a regulatory environment that supports diaspora remittance and savings? Also, I'm looking forward to hearing from our speakers whether they have any tips on remittance technology and remittance solutions to address the issue of cost of sending remittance back home. And one of the topics that a lot of us have heard about, we'll hear experiences from Rwanda and Nigeria on Diaspora Bond as a platform to support Africa development. I'm delighted to welcome participants from across the globe, from Asia, Europe, Nigeria, Kenya, Botswana, and you can see the countries that are joining us this afternoon. I'm also very, very impressed that my colleagues from Kenya and United Kingdom have been that we have the most participants from the UK and Kenya. The companies represented this afternoon, varying from DFIs, financial institutions, academic institutions, and many more. So a very warm welcome to each one of you from every corner you're joining us from. And to take us through this conversation, I'm also delighted that to confirm that this webinar is hosted in partnership with our partners, the Royal Africa Society. It's my honor now to invite Dr. Nicholas Westcott, who will introduce the moderator and take us through the next step. A warm welcome to you, Dr. Nicholas Westcott.
Thank you very much, Agnes, and welcome to everybody. My name is Nick Westcott. I'm the director of the Royal African Society. We, like everybody, are currently working remotely and undertaking our activities online. This particular one is a co-production with GBS Africa, and we are having a whole series of events which include a number on the impact of COVID in Africa, and coming up soon next month on Black Lives Matter and the implications of that. So a lot of other meetings which you can see on our website. As we have no physical meetings at the moment, we can't charge for entry. So all this is free. But as we are a small membership charity, I do encourage anybody who is not already a member to join the Royal African Society. It helps keep us going. And if don't want to do that, you're very welcome to donate some of any amount, which you can find a donation box on our website. Today's event focuses, as Agnes has said, on remittances. And especially now in this time of pandemic, people are realizing how critical these are for the whole of Africa. In 2016, remittances accounted for just about half of all the private sector flows into Africa. So as much coming in remittances as there was in other major private sector investment. And that gives you an idea, as Agnes said, it was a huge volume that this is. And in some ways, it's more useful than that private sector investment because it's very widely distributed, particularly at local level and to people who really need it. So it's in some ways a very efficient form of capital transfer. But the World Bank have estimated that so far this year, the volume of those remittances to developing countries has fallen by anything between 20 and 50% because of the impact of the pandemic. This is clearly having a major impact, and it's very important in those circumstances to look now at whether these remittances are being effectively transferred, that it's a streamlined process, and what are they being used for? How can we ensure that they are being put to the best and most effective use? We have a really distinguished panel to discuss these issues from across Africa. And to introduce the panel and to take the discussion forward, I'm delighted to welcome Juliana Olayinka, distinguished journalist, communications consultant, everything. Juliana, over to you.
Thank you so much. Thank you, Dr. Nicholas, and welcome. Welcome to the audience. I know that we have attendees from across the world, from various sectors, including policy makers, movers and shakers, and people like me who send money back to Africa all the time. So I want to thank you so much for all joining us. This is a really crucial talking point, and it's very lucky and fortunate of us that we do have, as Dr. Nicholas says, a distinguished panel of individuals who not only have started talking about remittances as soon as it became a buzzword, because I'm sure all of you know over the past couple of years it has been a buzzword, but remittances and trying to galvanize the importance of remittances has been ongoing. This is something that has been an important factor for the development of Africa over the past few years. So I would like to introduce the panelists of who is going to be speaking with us today. We have Dr. Amadou Cisse, who is the Executive Director for the African Institute for Remittances. We also have Dr. Anthony Coleman, who is a Principal Research Economist at Afrexim Bank. We have Leon Isaacs, who is an advisory board member at IMTC and the CEO of DMA. We also have Honourable Abdulrahman Tareb, who is a senior individual at the Nigerian Diaspora Commission. We have Dr. Shem Ochuodo, the global chairperson of Kenyan Diaspora Alliance. And we also have Kenny Washington, the technical project lead at Afford. Welcome, gentlemen, and thank you for joining us today. It wouldn't be fair for me to go forward without thanking the hosts. I've got to thank Agnes Gittal, who I consider small but mighty. She is a warm friend, somebody who over the years I have shared a panel with on many African broadcast networks here in the UK. She has been committed into shaping the African narrative, particularly when it comes to business and finance. She, of course, is a consultant. She has worked for governments, not just in Kenya and across Africa, but across the world. And she's been doing her best to make sure that Africa stays informed. So I want to thank her very much for putting this together with Dr. Nicholas Westcott, who is heading up the Royal African Society. And for many of us who live in the UK, you would know that the Royal African Society has really been the benchmark for showcasing the best African talent, very inspirational, award-winning and global. So I want to thank the two of you because, as I said, this is very, very important. And sometimes we all know that statistics and data can distort, but the reality is COVID-19 has dramatically affected remittances and the amount of money that people are sending home. And I want to give an example of the United Kingdom, because there have been so much information that has recently come out from the Office of National Statistics, and it has confirmed that those from the BAME community, Black, Asian, minority, ethnic, are the most hurt when it comes to COVID-19. Not only have we been disproportionately affected with deaths, but we've also been disproportionately affected with how it affects our income. We've been on the front line for many of the services trying to battle COVID-19. Many of our doctors have lost their lives, our train workers, our transport workers, our cleaners. And so this is the reality of this pandemic. And we know that these are the individuals that would have been sending money home. So there is a reality at the back of this. So without further ado, I would like to go into the program. But before we do that, we do have some housekeeping rules. The individuals are on Zoom, so it's important that we make sure you're connected via audio only. So please switch off your video, though I would love to see you, not today. We actually have our poll question. This poll question is a good question to kick off the discussion, just to see what you're thinking about remittances and whether or not it's affected you. I know it's affected me. So the first question is, which you can see on your screen: in your opinion, do you think diaspora remittance will play a key role in developing key sectors in Africa post-COVID-19? In your opinion, do you think diaspora remittance will play a key role in developing key sectors in Africa post-COVID-19? Yes, no, maybe, or I don't know. Panelists, unfortunately, you can't vote. You're too well informed, and your answer can be given during your keynote. Okay. Oh, we have a result, and the result is yes, 62% of individuals believe it will, 3% believe no, 21% maybe, and 14% I don't know. Hopefully by the end of this discussion, you would have been clear with your opinion. So what we're going to do now is we are going to go straight into our first keynote address, which will be given by Dr. Amadou Cissé. I've got to say, of all of the panelists we have speaking today, Dr. Amadou possibly has the most stressful time over the next couple of months, because he chairs the African Institute for Remittances, which is a technical office of the African Union. And what they will be doing over the next couple of months is trying to figure out how, they can get the best of this situation and try and take this negative impact of remittances declining and turn it into something good. So I'll pass over to Dr. Amadou Cissé now, who will be addressing us. Thank you so much, Dr. Amadou.
Thank you so much, Juliana. Thank you for having us. Thank you to Agnes and to all the organizers, Nicola and our colleagues. Thank you for this introduction about the remittance. Remittance is a challenge for Africa. It is a challenge for all the countries that depend on remittance. The reason being that those who need remittance, they are the most vulnerable people. Those who need remittance and receive it, they are the ones who need that money to send their children to school. They need the money to send send their children to the hospital. If that money is not coming, the challenges are increasing, and definitely it will have a lot of definitely have impact on the standard of living of many Africans, as well as many people all around the world. Is it possible for remittance to have positive impact on Africa's development? Definitely, yes. I do think that it is possible. The diaspora can contribute to that through the remittance, but also through many other means. Mobilizing the diaspora is not only mobilizing their financing, it is also mobilizing their know-how and their savings. And these are issues that are very important for us when we design policies, when we design strategies to make remittance effective, to make remittance work for Africa. Beyond the microeconomic impacts, it will definitely have macroeconomic impacts, and definitely during the discussions we'll be able to elaborate more further. Thank you.
Thank you, Dr. Amadou Cissé. I wanted to pick up on the macroeconomic development because, as you said, remittances usually goes to the people who need it most, the most vulnerable. And because of the nature of Africa, they do use this to start their own businesses. But what are some of the examples and the sectors of the macroeconomic development?
The macroeconomic development, it is very clear for us. Look at the nature of the consumption of those who receive remittance. They support the local enterprises. This increases the supply, the local supply, and supports the GDP. And I think that we should not just look at the fact that people are not themselves investing, but they increase the market in a way. Another thing is that remittance, when people receive remittance for the financial sector, it is something that builds up the external reserves that allow the country to import the equipment that they need to build Africa's development, to build Africa's industrialization. I think there are so many ways that remittance will impact the economy in the African countries.
And very lastly, Dr. Amadou, seeing as you're very good with time and we've got some time on our hands, got to ask about the reduction in remittances being sent due to COVID-19. Is this just a flash in the pan? If you look at GDP figures from across the globe, we are, of course, seeing a contraction in GDP, but it's quickly picking back up again. Do you think this will be the same effect with remittances, or is there a long-term concern that the bank is looking at?
I should say that I have seen so many focus highlighting the decrease of remittance. Yes, it might decrease, but from our perspective, from our point of view, we don't think that it will be that important, the decrease. The reason being that we have to understand the pattern of what is behind the remittance. These are people that sacrifice themselves. Even if they don't have income now, they will now use their saving to support their family. And that in many African countries during this COVID, we have seen that remittance has increased. Remittance have increased in some countries. In a way or another, I think that deep burden would be on those who send, because they know that these people that are behind them, they only rely on them. And this will change their behavior in terms of saving rather than trying to cut the remittance. We don't think that it will be the case, honestly. And we think that, yes, the decrease of the GDP, the global GDP, will have some impact on the potential revenue of the migrants. But in a way or another, like we saw in other crises when it was very hard on the migrants, they did continue to support their family. And we believe that this is the model that will happen this time again.
Thank you, Dr. Amadou, opening up on a positive note there, which is really important. Can I just remind everybody that you can address Dr. Amadou? So if you have any questions, please do post them. And also the event is streaming live on Twitter at GBS Africa. Don't forget to use the hashtags if you may. Thank you there. I would like to now move on to our second speaker, who is Dr. Anthony Coleman, the Principal Research Economist at Afreximbank. Dr. Anthony is an experienced research economist who joined the African Export-Import Bank, which is pretty much a mouthful, 8 years ago, having previously worked with the University of Ghana as an economics and applied economics professor and in research capacities with the Bank of Ghana in the International Monetary Fund, among many other organizations. That doesn't do him justice, but due to time, let me just hand over to Dr. Anthony now. Thank you so much.
Madam Moderator, and thank you, my co-panelists. The topic of remittances is very timely. The studies, numbers all over the place shows that for over the past 5 to 10 years, remittances have actually exceeded FDI inflow into the continent. Not only Africa, in a number of developing economies, remittances appear to have become a major source of external finance for development. The relevance of remittances, especially in Africa, for sustaining livelihoods and for supporting national development is never in doubt. The fundamental question that comes up for you and I to address is whether Africans are making the most of potential remittances that could be harnessed to support the continent. We should remember the fact that post-COVID-19, most advanced economies are going to prioritize their internal affairs. And for that reason, overseas development assistance and so forth and so on are likely to be going down and down. What then do we do in tapping into diaspora remittances in order to finance our development? As Agnes highlighted, Africa's infrastructure gap is huge, trade finance gap is huge. What do? We cannot always go out there to be looking for people to support us. It is time we build our own economies and then manage our own affairs. In this context, it is imperative also to highlight the fact that apart from the official remittances, it is actually estimated that unofficial remittances exceed official remittances. How do we tap into those remittances in order to support the African economies? For me, the first step in trying to address this important issue is how do we make our economies attractive? Growing up, when I see a cousin or a brother traveling overseas, the issue is that he's going out there to work and then come support the family home. In other words, support the economy. But over the years, what is gradually appearing to be the norm is that due to the unattractiveness of our economies, we have Africans leaving the shores of Africa, have their livelihoods elsewhere, and decide to stay. They begin to invest their resources in these economies, moves on from one generation to the other, to the other, to the other. And so we miss out on the human capital and also miss out on the potential optimization of the resources that these could use or could bring to support our continent. So my basic take is for us to be able to harness and optimize the use of diaspora remittances, the fundamental issue is to make our economies attractive for them to think of investing and coming back home eventually. Thank you.
Thank you, Dr. Coleman. Really interesting points there, especially what you were saying about foreign direct investment. We know with, the disbandment of DFID and trying to merge it with the Foreign Commonwealth Office, that this is definitely an agenda on G7 nations and the West in general. I want to ask you very quickly about Ghana, because Ghana does appear to be attractive. Your PR machine is working very well. I know you have a very close relationship with your diaspora. Can you tell me a little bit about that and how remittances are being successfully used? Because I know you have the great comeback home. I must join you there one Christmas. Yeah, the new government initiated a very important agenda called the Year of Return. And we had a lot of Ghanaians outside trooping in, basically to explore what are the investment opportunities. What can I do in Ghana? How can I utilize my savings, especially in Ghana, and so forth and so on. Now, after the year of remittance, after the year of return, the other issue is beyond the return. What happens? Now, Ghana receives on annual basis remittances, which is estimated around $2 to $4 billion. But as a Ghanaian, I do not think that is what is actually out there for Ghana to harness.
We do not receive so much remittances predominantly because most diasporans do not possibly find the economy at a stage where they will see comfortable to come in. And so what I know Ghana is doing right now is enhancing the attractiveness of the country, trying to fix the deficit of infrastructure, trying to ensure that the basic issues that make every human life comfortable are being addressed.
It's
Once
a long
these
journey,
fundamentals are
Dr.
addressed,
Coleman, but certainly a journey I know Ghana is going along. Thank you, Dr. Coleman. We will hear from you again. Please do put any questions you have for Dr. Coleman in the chat box. And now we're going off to France virtually, which is good enough for me. And we have our next speaker, Mr. Leon Isaacs. Leon is a Chief Executive Officer of DMA Global, the specialist international development company that he founded in 2007. He's a seasoned expert and business leader in the payments and international development field, with particular expertise in migrant remittances. There's so much more. He has worked with the UK government as well on their remittance task force for several years. Very seasoned, and we're very fortunate to have him. Hello, Leon. Bonjour.
Merci, Juliana. Thanks very much for your kind introduction and also for being here. In the few minutes that I've got, I just wanted to make probably 2 or 3 points, but try and cover a lot of ground. I think one point is more definitional. We often confuse or conflate remittances and diaspora investment, and in reality, they're actually 2 different things. You know, remittances is all about the transfer of the money, making it as cheap and efficient as possible and getting it to as many people in as broad a space. Whereas diaspora investment is much more about how can we harness the value of the savings primarily that members of the diaspora have. So they both involve diasporans, they both involve money, but they're 2 quite different things. So I just wanted to touch very briefly on both of those and what we might do. I think with remittances, I completely agree with Amadou. Even though there's a lot of doom and gloom around, I actually think remittances are likely to be potentially a saviour for a number of economies in Africa as we go forward. I think the real key with remittances is to make it digital. And there's been a lot of talk. It's been one of the, if there are any upsides to this crisis, it has been one that it has forced people to look at digital solutions and particularly harnessing mobile money. There's been a lot of talk, but we need to get people in Africa particularly to use mobile money as best as we can. Right now, probably 70% plus of transfers are going in cash, but if we can make it digital, we can reduce the cost dramatically and increase the spread throughout the continent. There's a lot of work needs to be done, particularly around regulation and education and building infrastructures. But if we can do those things, we will make a significant change for the future. On the diaspora investment side, I just wanted to say briefly, I very much appreciated what Dr. Anthony just said, is from work we've done, and we've built toolkits for African governments on how to attract diaspora investment. 2 key things sort of need to happen. One is to develop the local infrastructure and economy. We can't expect every country to be immediately able to offer diaspora bonds. The conditions are not the same in every country. So each country needs to understand its own unique position and what the solutions that are appropriate to them are. The second thing is we really have to build up trust. A trust in the diaspora that if they send their money or invest it, it is safe, that the proposition is as good as, doesn't have to be better, but as good as what they could do with their money in the country that they're currently living in. And very much, sorry, always happens to one, doesn't it? Sorry. And so to make sure that the trust is really the most important thing. And to do that, we need to really understand them a lot more. So we need a lot more research into the needs and wants of the diasporans, rather than building products that we hope the diasporans will want. So I'll probably finish there and leave it to the others.
Thank you, Leon. Please put your questions, everybody, if you'd like to ask Leon a question. I want to ask you one, Leon, because you touched on regulation infrastructure. What about fairness and policy? Because I know that there have been a lot of digital startups that have complained at the cost of sending money to Africa. Why does it cost so much more to send money to Africa than it does anywhere else? Same as air tickets as well, I've got to add.
Yeah, I think unfortunately there's a whole series of reasons for this, so probably take the rest of this session to cover it. But I think if you looked at some of them, it is a mixture of there's not enough competition in some of the corridors. There's anti-competitive practices in others, particularly around exclusive contracts in parts of Africa. There's a lack, the way that money is sent is very antiquated, it's very cash dominated, which means that you've got too many people involved in the chain of sending money. They each want to earn something, so it keeps the price up. That's where digital is so important. And then there's the regulatory environment that in many parts of Africa restricts who's actually, what types of businesses are allowed to offer the services. And so often it's bank dominated, which means there's another entity that needs to be in the chain. It's not all the case. And then unfortunately, you've also got a lot of countries which are relatively small in population or diaspora bases. So if you compare, say, if I'm a money transfer company and I have a choice of sending to India with over 1 billion people, or to pick a country, Sierra Leone, with a few million, even if I had all the Sierra Leonean market, it would be very difficult to make sufficient revenue. So supply and demand as well.
Supply and demand is key. I'd be interested at the end to hear Dr. Wamadou's take on that. I'm sure that's something at the bank that they must try to be lobbying against. Let's move to our, thank you, Leon. Let's move now to Nigeria. And we will be speaking and hearing from Honourable Abdulrahman Abba Terab, who is currently the head of technology transfer and innovation at NIDCOM, which is the Nigerians in Diaspora Commission, a new commission, which was highly anticipated. Honourable Terab is a seasoned politician with over 15 years of both federal and state level experience. He's worked in the Ministry of Finance and Economics in Borno State, which is in the north, as well as poverty alleviation and youth empowerment. In the country's House of Representatives, Honourable Terab was part of the Committee of Finance and the Committee on Diaspora. So he definitely knows what he's talking about, and I'll pass on to him now. Thank you, Honourable.
Thank you very much for having me. I think let's, from our own perspective here in Nigeria, first of all, we appreciate the fact that the government has finally acknowledged that diaspora matters, and our diaspora is going to play a very, very vital role in the development of Nigeria. Specifically, human capital. I think there is an acknowledgement that human capital development is very key to the development of our country. And then we have a vast majority of highly capable ones outside the country. And to acknowledge that, I think, is a step in the right direction. And that, I think, is what eventually led to the establishment of the commission, which is backed by the law of the National Assembly. However, the most important thing here is that we believe we need to kind of relate with our own diaspora. That hasn't been the case with government and diaspora in the past. And I think that is a stepping stone. Of course, I appreciate the fact that previous speakers have spoken about making our economy attractive and, of course, creating all the right incentives. I think the most important thing is to have that solidarity, to create that relationship, to make people have that sense of belonging, that the government understands them and would like to partner with them. And I think the establishment of the commission itself is actually geared towards harnessing the potentials and the capacity of our diaspora for national development. And of course, which also means the relationship is going to be reciprocal. In the same manner, we expect them to be part of the driving force in developing the country. the government must also be aware and at the same time be responsible for our diaspora outside the country. I think that's the kind of the foundation from which we believe it is going to kind of have an impact positively on the on the amount of remittance that Nigeria gets. But beyond that, some other speakers have also highlighted the fact that most of them are not formal, or most of the remittances that come into the country are not formal and not official. And I think that is a key area, because we believe that we have to start engaging with major partners in remittances. And of course, by that we have set up collaborative efforts with the Central Bank of Nigeria and the International Money Transfer organizations across the board, in order to see that the cost of remittances, especially to Nigeria, which we believe is one of the highest in the world, needs to be reduced. We have all the incentives to do that. Of course, Louis talked about the fact that, of course, probably some of the market might not be vibrant, competition might hamper the rate of the cost that is being charged. But in Nigeria, I believe we are currently, of course, about the second, almost topping the African chart. And that also means that with $25 billion in the last year, out of $48 billion, we are almost contributing 40-something% to 50% of remittances into Africa.
It's an extraordinary amount, Honourable.
Yes,
and I'm sorry to cut you, and I don't intend to, but I'm just looking at time, and I want to ask you a really important question, and that's because, as you said, Nigeria, not only are the diaspora contributing a significant amount, if not the highest amount in Africa. I have a business show here which airs in Nigeria, and a lot of questions or a lot of remarks that some of my panelists have had on my show is to do with trust and the fact that the diaspora don't want to send
actually, if you have allowed me,
to the government. You're going on to that point, please do.
Actually, okay, now aside the regulatory aspects of it, we have to also look at what is the major attraction to diaspora remittances in Nigeria. One of the major, and of course, undoubtedly the hugest part, is contributions for housing development. People send a lot of money to build houses. And what has been the bane of that is that there is a trust issue. A lot of people who have sent money back home to develop houses or to build houses, by the time they come back after 5 years, 10 years, sometimes even after 2 years, they find that not even a land exists, let alone the housing. So the first thing we did from the Commission's perspective is to approach the Economic and Financial Crimes Commission, EFCC, in Nigeria. So we collaborated, we established a desk. Now, any member of the diaspora who has sent any amount to anybody and is not, and in his own understanding has not been utilized as effectively as well, he can approach that desk. And we are willing to provide legal support and at the same time investigative support to ensure that there are going to be people who can be taken to court and prosecutions can be handled.
Absolutely, and I know the EFCC have been exceptional over the past couple of years under Magu there. But what I was actually referring to, and I won't point that to you now, I'll point that to all of the panelists, is really about the trust of governments. Why do I, who's working 12 hours a day, perhaps 2 jobs, I want to send money to my dad or my uncle or my father-in-law? I don't want to send it to the government. I'm looking after the individual that the government should be looking after. That's a huge question that a lot of individuals in the diaspora are asking. And because the subsidy is not there, that's to everybody, not just to the honourable gentleman. I'm so sorry, Honourable. We are going to go on, but we are going to come back to you, I assure you, because it's an important question and I do want to hear your response. But we're going to hear from now Dr. Shem Ochuodo, who is the global chairperson at the Kenyan Diaspora Alliance, a federation of over 30 major diaspora organizations with a combined membership of more than 250,000 individuals, which is astonishing. Dr. Ochuado serves as a trustee at the Diaspora Investment Club, which is the Kenya Diaspora Alliance's business and investment startup flagship, currently managing projects worth over $4 million US. I'm sure it's much more than that. Your doctorates are amazing, but it's so long I can't go into them. Dr. Shem, thank you so much. Please take the floor.
Thank you very much, Juliana, Agnes, Nick, and the rest of the eminent panelists. I must thank you for choice of this word, Africa Diaspora Baraza. It's the Africanness, Swahili word. And when we talk digital, I'm delighted also to note we're celebrating 25 years of internet being in Africa because we're talking digital. Allow me to begin by addressing the figures. We may need to check. Obviously, World Bank is authoritative, $48 billion. We've had Nigeria's 25 billion, and that's what I'm a little more used to. We've tried to assemble various sources. I think remittances into Africa stands at about $80 billion. The figures we have, about 25, 30 billion to Egypt, 20, 25 billion to Nigeria, 9, 10 billion to Morocco, and down about 4 billion to Ethiopia, 3 billion Kenya, Ghana, and so on. And I think that's what's being corroborated by the speakers before me. So we need to look at that 48 versus 80 billion. Having said that, particularly for Kenya, the 3 billion put in context is worth more than 3 of our top agricultural exports put together. Our top exports are tea, horticulture, and coffee that bring in $2.4 billion. The other major foreign exchange earner is tourism, which brings in about $1.2 billion per year. Clearly, you can see diaspora sits quite pretty well. Like some of the other colleagues have mentioned, that's only the financial side. The intellectual side and even the diaspora diplomacy and the business networks diaspora can bring to bear are even much bigger because they're hard to quantify. I may just draw attention to the panelists and participants that 2 years ago, the Third World Academy of Sciences, Trieste, Italy, did launch a report on world scholarly publications that established that Africa's share of scholarly publications was only 2%. And that 2%, 65% was only from 2 countries, South Africa and Egypt. Of course, the question you ask is, where are the Kenyan, the Ghanaian, the Senegalese professors and doctors and engineers and all? But as the report was launched, the question was asked, why don't we turn the narrative and look at the other 98%? How much of that is African, whether it's British or Japanese, and so on and so forth. So the intellectual resource is equally critical. Maybe lastly, I may also just mention and agree with those who've expressed the concern that perhaps we need to be treating our diasporas a bit better. One of our members say, you know, they're just interested in our remittances, but not remitters. Okay, the people who remit, and we need to pay attention to that. I think I could leave it at that point. Juliana, thanks for the opportunity.
Dr. Shem, thank you so much for your remarks there. Very important. I want to touch on the work that you're doing with the Kenyan Diaspora Alliance, 250,000 individuals. That's you know, a huge number. Congratulations on that. And going back to Dr. Anthony Coleman's points, how have you managed to attract so many individuals, which is what I believe the Nigerian Diaspora Commission is doing? How does that alliance work?
I have to admit, it's not easy. It's about 30 years involvement with diaspora matters. But this is why we have gone through our affiliate organizations. Actually, at the moment, there are 44 organizations. So we operate largely through them, and they're scattered literally in every part of the globe. And I must mention, we are also in touch with other African transnational diaspora. Some would call them umbrella of bodies. We prefer to call ourselves a federation of diaspora, Kenyan diaspora associations. We're working towards an African Diaspora Alliance with other partner groups from other African countries. And we are happy to work together with the groups represented in the House and others not in the House to realize that dream. And I should also add that we often focus more on the contemporary diasporas and ignore the historical diasporas, the Caribbeans, the African Americans, the Afro-Europeans, and so on. And I'm glad Ghana is playing a role in that regard, but I cannot forget to add, when the AU Summit took place in Addis in March, the heads of states did acknowledge the work Kenya government is doing with its diasporas and tasked our president to convene an African Diaspora Summit in 2020. We are hoping, COVID notwithstanding, that's still going to happen, and we'll be reaching out to the partners. Thank you, Juliana.
Thank you, Dr. Shem. I've got to add, actually, that Kenya are doing so well on the global stage at the moment, despite all of the hardships that most African countries are doing. You seem to be going from glory to glory, and we want to see that continue as African champions and Pan-Africanists. So thank you so much. We're almost on time, but we can't move on to our next poll and our Q&A session without speaking to our final panelist, which is Mr. Kenny Washington, who's been waiting patiently. Thank you, Mr. Washington. Kenny is the technical project lead for the African Foundation for Development's pioneering Diaspora Bond Investment Fund, which is crucial for affordable housing, providing project coordination across the legal, compliance, investment and local affordable house building partnerships and strategies to support Afford's entire value chain. For the past decade, Kenny Washington has worked in the not-for-profit sector, providing fundraising and program consultancy to international organizations across the world. Thank you, Kenny Washington. Please take the floor.
Thank you. And thank you very much for inviting me onto this incredibly insightful group of individuals. I think we've got already quite a progressive set of insights and directives that all should be considered in moving forward the area of diaspora remittances and investment. And my particular role within Afford is around the structure, and that being design and development of a fixed income direct diaspora investment product called the Remit Plus Rwanda Diaspora Bond. It started off in its genesis as a purely development initiative that was looking to harness some of the social impacts that many of the diaspora were looking at in terms of maximizing their contributions in their home countries. And it was done very much in partnership with the Rwandan government and a sort of hybrid fund that was acting as a sovereign wealth backed fund. But we discovered very quickly that the one thing that most of the panelists today have had as a common point of consideration is issues of the right investment climate in the country and the resulting need to, even if it's just perception, but it's likely to be a much more sort of technical process than this, promote the level of trust and transparency that inspires the confidence of a diaspora investor. We discovered this fairly early on because what we wanted to do was design a product that enabled us to address a key critical issue in the country, that being the lack of affordable housing, and just designing an instrument, marketing it to a diaspora audience needs some very careful considerations about what are the key motivations for diaspora investors. So there's a whole value chain piece that I am overseeing that looks at how the government support the development of an instrument of this nature, how we can utilize the best legal support to create a capital markets compliant financial instrument that's robust and regulated, all the way through to working with our partners on the ground in the construction industry to ensure that we can build an affordable housing product on time, on spec, and on budget. You know, there's a real operational directive to ensure that the use of funds performs well to maintain that confident relationship with the diaspora investor. We definitely recognise that figure that comes from the World Bank, that of the 86 billion of diaspora investments diaspora remittances in 2018, approximately 17.4 billion of those remittances were used for some investment purpose or outcome. We also recognise that of that 17.4 billion, much of it is in the investment in the informal sector, and I note that point around property particularly, that sometimes those remittances are going into personal or family building schemes that have an awful lot of problems being completed. And to some degree, that 17.4 billion is also looking for secure, robust and competitive investment products along those remittance corridors. And the bond that we're developing is definitely responding to that appetite.
Thank you so much, Mr. Washington. I think the Diaspora Bond is really the aspirational goal, I think, for all governments, isn't it, really? But I want to ask you very quickly before we go into our Q&A session. Thank you, everybody. You can still put your questions forward. We've got loads of questions. But I want to ask about the inclusivity of such initiatives. Going back to what Mr. Isaacs was saying, we know that most money that's being sent home is taken in the luggage, isn't it, when you're traveling to see relatives. And sometimes I think there are lots of African organizations that can be, unfortunately, quite elitist, exclude those who are most important. And I believe when it comes to remittances, it is those who are working on low-skilled jobs, low-paid jobs that are sending probably the most money home. How do you ensure that they're included in these policies?
Well, you know, there's a multiple set of drivers and considerations. On the remitter side, you need to ensure that you are competing with the savings products that many members of the African diaspora are utilising to deposit their hard-earned wages into various different savings schemes, and the use of that of the diaspora investment needs to be competing with their ISA, for example. So there has to be some performance criteria about the use of funds, but most importantly, it's incredibly important from our experience to ensure that the recipient country has got the right favourable environments for, if anything, the right system that says you can remit now, but if you utilise the right type of investment product, this could actually act as remittance substitution, that once revenues are generated through your investment in country, this could actually be the pool that you could be funding your family and your personal consumption needs in country.
Thank you, Mr. Washington, and thank you to all of our panelists. I assure you I won't keep you for too long, probably for another 15 more minutes, but we do have so many questions, and like I said, we've got a lot of important people, including us, online this afternoon. Before we go into that Q&A, I do want to go to our second and final poll, because it does tally nicely into what Mr. Washington was talking about, which is the Diaspora Bond. You should see it on your screens now. And would you or would you not invest in a Diaspora Bond? Yes or no? Would you invest in a Diaspora Bond? Yes or no? I don't have a drum roll, but I'm sure the response will be out there soon. Whilst we're waiting for that response, I'll go into our questions. We have a lot of them. We've got a result, and the answer is yes, 76%, which I believe is an overwhelming yes. That's important, because that obviously means that the message from the government, from policymakers, is getting through to the diaspora that we can do so much more rather than just sending it back home in your luggage. So we've got a couple of questions. I'm going to start from the top. Dr. Coleman, somebody said you're on point here. They enjoyed what you were saying. I'm sure that's one of our Ghana home returners talking to you there. We've got a question from Asaria. How much savings will result from digitization of remittances, going back to Leon's point? What are the vested interests preventing this? It's not directed to Leon, but I would like to, because you did mention digitization. We're going to keep it brief because we are coming to an end.
Okay, thanks very much, Juliana, and thanks for the question. I think the simplest way to answer the question is to say that on average, it costs around about 9% at the moment to send money to Africa. 9% if you send $200. So you think $18 if you send 200. It's a phenomenal amount of money. From research that we've done previously on behalf of the mobile money operators, if you send money from your mobile account in one country to another country, the cost is 1.7%. So crudely speaking, you could say there's a 7% saving on your 86 billion. So that's sent to Africa. So crudely speaking, you could say $5 billion or more. So it's massive. And also, I'm not sure the phrasing of the question about what are the vested interests preventing this is quite right. I think it's more about, if you said what's getting in the way, you would say, come back to my previous answer, it's a combination of lack of infrastructure, some not very good regulations, or some not enabling regulations, and also not enough competition. But we're heading in the right direction, I think is a good thing. And if we focus on this as the outcome, then we can actually get much more progress to save $5 billion or so each year, not just one off, that's each year, remember, so it's a phenomenal amount of money.
Thank you there, Leon. There's a next question here. How do we ensure that remittances do not give diaspora a disproportionate leverage or power over those citizens in country? I would like to throw that to Dr. Anthony Coleman and Dr. Shem Ochuodo, please. Please keep them brief, gentlemen, your responses, but because of Ghana and the return homecoming, and of course, because of the 250,000 people you oversee, it'd be interesting to hear how you balance that.
Thank you, Juliana. I'm not too sure whether the questioner was on point, highlighting giving undue advantage to the diaspora in terms of remittances over indigenous or those who are at home. I think what he's talking about is diaspora investment. It is a diaspora investment that normally most economies will want to create a conducive environment in order to ensure that they attract these. But for me, the issue is not one of giving an advantage. The issue is one of ensuring that we are tapping into available resources in order to develop the economy, so that in the long term, the multiplier effects affect everyone. For remittances, you have people sending money to their household for basic needs, for school fees, for health, access to health, and so forth and so on. So in terms of remittances, most of the time, there are no differences in terms of preferences by government or the other way around. But it is rather diaspora investment that the government most of the time create an environment to ensure that these people are motivated to invest.
Thank you, Mr. Coleman.
And it doesn't only go for the diaspora, it goes for any investor. Any investor that you want to attract, you must create the enabling environment to motivate
Absolutely.
And to encourage.
Absolutely. Let me pass that on now to Dr. Ochuodo briefly. Thank you, Doctor.
Thank you, Juliana. Allow me, before I respond to this, the earlier question, the cost of sending money to Africa, I actually think has come down significantly, particularly from the West. I would think it's about 3%, but this can be checked. Where the cost is still very high is intra-African. So sending from Senegal to Gabon or to Kenya. Having said that, also savings for Kenya, it's estimated 75% of the remittances go into family support. 25% is what goes into maybe investments and ad savings. But responding to the current question that was asked, and this also relates, I think, to that, and with a previous experience as a former member of parliament, 2 years ago, we took a poll among Kenyan diasporas. What best do they want government to do for them? 6% said we don't want to pay petty bribes. 7% said we want our properties in Kenya protected, not pilfered. They didn't want to pay for public services. But a bulk majority, 54%, said we want to be able to elect our representatives. So I think if we figure out what is it that the diasporas want and give them what they want, I think in this regard, I must compliment Nigeria and particularly Francophone African countries who have elevated diasporas to a ministerial level capacity. And that probably needs to be replicated across board. That's what I would say.
Thank you, Dr. Shem there. Let me ask this question to Dr. Amadou here. What is your take on forced remittances, as in the case of Eritrea? Yes, that's from...
Thank you. It is called the forced remittances, but I don't think that it is that. It is just they are forcing their people to contribute to the development of their country. It is, I think, something that is beyond the remittance. It is the national preference and how the country, Eritrea, would like to engage their citizens out there, asking them to contribute a share of their income for the country's development. But let me just take this opportunity to come back to the issue of the cost. I think beyond the cost, what is important on cost is not really only the reduction, but why are we seeking that? It is for us to be able to, for people to use formal means to send remittance. If they don't use those formal means, it would be difficult for you to identify them and to build any leveraging policies. That's the reason why it is important to reduce remittance transfer costs so that people can use the formal use and then you can leverage remittance. Yes, there will be savings, but the savings are not that important in this strategy. What is important is to know who is sending, what are the reasons why it is sending, and what can we do now to take this to the next stage. Do they have enough saving, and then can we tap on that for other purposes? Thank you.
Thank you, Dr. Amadou here. We have a question for you, Honourable Tareb. What are the strategies the Nigerian government is evolving to attract diasporans to invest in Nigeria? Many Black Americans are also interested in relocating to a Black African country they could call their own and establish businesses. Is Nigeria tapping into this window of opportunity to grow her economy? Really important question. We'll keep the answer brief. Thank you.
Before now, there was the Diaspora Bond was floated, and it was oversubscribed. As a matter of fact, we are working on the next issue, on the issuance of the next one. That is one. But secondly, and most importantly, also the Diaspora Housing Mortgage Scheme is currently underway with the Federal Mortgage Bank of Nigeria. For the first time, the government banking agency, which has a lot of cash reserve, is willing to engage with the diaspora so that it can provide incentives for them to come and have participate in the real estate economy of the country, with a lot of incentives, and at the same time the opportunity for them also to have homes of their own. Everybody knows how not only huge but also how rewarding the Nigerian real estate industry is. So I think these are some few areas that Nigerian government and of course the Commission itself is deliberately trying to encourage investment of members of diaspora, as well as the fact that we always encourage foreign investors to liaise with our own diasporas in their own various domains, because it's always easier for you to find a Nigerian who knows the terrain better and can lead you into what real investment situations are in Nigeria, rather than just taking data, reading it. And sometimes some of the news you hear are much scarier than what Nigerians actually in your own places can be able to tell you. So this is the kind of drive we are taking, and I believe it has started showing some good results.
Thank you very much, Honourable. We have a final question, which is for Mr. Washington. Perhaps a question we should have started from, but at least our audience and myself, we can go away more knowledgeable. And that's really about the Diaspora Bond. What is it in simple terms? What exactly is the Diaspora Bond? And for those of us who responded yes on the poll question, how can we get involved? Thank you.
Well, put simply, it's an investment product that allows a diaspora investor to invest as little as $500 US to buy a piece of a 10 million investment opportunity to build 460 affordable homes in Rwanda over 3 years, returning approximately 6 to 8% return on investment and issued in local currency.
Thank you. Thank you, Kenny Washington. Thank you, Dr. Amadou Cisse. Thank you, Dr. Anthony Coleman, Honourable Abdurrahman Tareb. Thank you so much. Dr. Shem Ochwondo, thank you. Leon Isaacs, thank you. Thank you so much to all of our panelists. This has been such an important discussion. It's timely, as we've all said, and I'm so happy that we have reaffirmed that even though the statistics and the headlines say that remittances is declining, we know it's not. We know that in the diaspora, we always send money home, and we'll continue to do so because we know that that's the benchmark of the society and the benchmark for development. And I'm hoping that all of the information and all of the questions that we've discussed here will be compiled, as I know GBS will do so, and perhaps we will pick up this discussion at another time, and I'm sure that Agnes will be lobbying to try and get some of the points we've raised much further along in the development chain. I will be passing back over to Agnes and Dr. Nicholas, but thank you all so much, and I hope you all learnt something today.
And thank you very much, Juliana. Thank you for running this session so flawlessly. I have really enjoyed listening to you and listening to every of our speakers. So a very thank you from each one of us and to every one of our speakers. Yes, we will be compiling the report and we'll share with each one of you. And to end, I really want to say that, yes, we have a role to play as a diaspora, not just in the money we send home, but as everybody has called for, the solutions of our continent depends on us. We have the answers and we can do it. And it's incredible to hear perspectives from Kenya, Rwanda, Ghana, Nigeria, and we can, each one of us, borrow a leaf from each one of this. And maybe to conclude, I'm going to say what quote President of Ghana, President Nana Akufo-Addo, when he said the place, bear with me, the place of the diaspora, the status of the Africans in the diaspora is intimately linked with what happens in the continent. A progressive Africa transform the status of Africans in the diaspora. So yes, if we are to make Africa better, it is also the responsibility of the Africans to make it better so that we can support in the development. I am going to end there, and again, thank you. Dr. Nick, I'm not sure whether you have 1 minute to close. Sure, I hand that back to you.
Thank you very much, Agnes, and thank you, Juliana. Thanks to the whole panel. As you've said, it's been a very stimulating debate, and I think if there's one takeaway that I drew from that conversation, which was really useful, is that we're not trying to divert remittances. We want to sustain the remittances, and we're trying to mobilize additional resources and skills. And that's what I think we're looking at stimulating, and in particular focusing at the African end on this, as well as just here in countries like the UK. That will be what is going to unlock that additional resource and additional skill for African development. So thank you all very much. A very positive discussion, excellent polls, and we look forward to seeing you at our future events. Don't miss the website, and don't forget to donate if you can. That would be very welcome. Thank you all very much for joining us.